Artificial intelligence has officially taken over the markets. While everyone's chasing the next big hype, the smartest investors are quietly buying the companies that are actually building the AI future. Today, I'm breaking down the 5 AI-related stocks that I believe will continue to dominate over the next 5 years. These aren't meme stocks or short-term plays, they're real businesses with durable growth, strong cash flow, and deep AI integration that's only getting stronger. And by the end, you'll see exactly which of these company still has room to run even after the market's massive AI rally this year. If you're someone who wants to take control of your finances and build wealth step by step, you're in the right place. Before we get started, make sure to hit the like button and subscribe to the channel. It helps the channel reach more people who want to build wealth through smart investing. Quick note before we dive in, this video is for education and entertainment purposes only. I'm not a financial advisor, so definitely always do your own research before investing your hard-earned money. All right, let's get right into it. Let's start with one of the most underrated AI powerhouses on the planet, Google, or more accurately, Alphabet. I still believe Google is one of the most compelling AI investments for the long term. And yes, I know the stock's already up a lot in 2025. It's gained roughly 30% in the past few months, and some people think the opportunity's gone. But when you zoom out and look at what's happening inside the company, that couldn't be further from the truth. Google is the perfect blend of low downside and high upside. Its valuation, even after this run, is still pretty reasonable, trading around a 23 times forward price to earnings ratio, which is modest for a company this dominant. The key to understanding Google's value isn't just search. Everyone fixates on search because it's such a massive part of the business, but that's only one piece of the puzzle. Search itself is still growing double digits and becoming smarter every year thanks to AI. Google's new AI overviews are faster, they're more accurate, and more integrated into daily search behavior. But what really excites me are the other parts of Google's ecosystem. Google Cloud is now the second fastest growing cloud platform in the world. It's winning enterprise clients because of how tightly it's integrated with Google's own AI models like Gemini and DeepMind. Then there's the subscription business, a massive transformation most investors overlook. Between Google One and YouTube Premium and other services, subscriptions now bring in tens of billions of dollars annually. In fact, that segment alone is approaching $45 billion in revenue. And YouTube continues to be a sleeping giant. It's growing ad revenue around 12 to 13% per year and has one of the strongest creator economies in the world. Within 5 years, YouTube alone could be worth $1 trillion market cap business by itself. So when you put it all together, cloud, Gemini, DeepMind, YouTube, subscriptions, and search, Google's intrinsic value is still significantly higher than where it trades today. Personally, I think anything under $340 a share is an attractive buy. And when I think about AI leaders that will still be thriving in 5 or 10 years, Google remains near the top of my list. Now, if Google represents the analytical and software side of AI, the next company represents the backbone that actually powers the digital world. Next up is Amazon. And I'll say this right away, this is one of the lowest hanging fruit stocks out there today. It's obvious, but that's exactly why it's worth owning. Amazon's trading around $220 a share, and some investors hesitate because they remember when it was cheaper earlier this year. That's classic anchoring bias and comparing today's price to what could have been and missing what's right in front of you. Amazon is stronger than ever. It's growing revenue about 11% year over year, and the most profitable segments of the business like cloud and advertising are growing even faster. Let's start with AWS or Amazon Web Services. It's the crown jewel of Amazon's empire. With more than 4 million active customers, AWS remains one of the most consistent compounders in tech. Growth rates fluctuate quarter to quarter, but the long-term trajectory points toward continued 20% annual growth. And here's another critical piece. AWS is deeply embedded into the AI boom. The company has invested billions into AI infrastructure and struck major partnerships with Anthropic and other leading AI labs. Every time a business spins up new AI tools, a portion of that compute likely runs on AWS. Beyond that, Amazon's advertising business is quietly exploding thanks to AI optimization that better matches ads to customers. That's an underappreciated profit engine growing at over 20% per year. And let's not forget Amazon Prime. Between free shipping, streaming, and exclusive deals, the churn rate is incredibly low. Amazon's also automating its logistic network, testing humanoid robots, and using AI across warehouses and delivery systems to improve efficiency. All of that means Amazon is effectively an AI company disguised as an e-commerce giant. At these levels, I see the company is undervalued compared to its long-term earnings power. For me, anything under $300 a share still represents a buying opportunity. So far, we've covered two American tech giants, but the next company, while based in Europe, is arguably more essential to the entire AI revolution than either of them. But before we jump into that, here's where I personally buy Bitcoin and other cryptocurrency, and I've been using them for a while now. All opinions are my own, and we're not influenced by Gemini. I've found Gemini to be one of the safest and easiest exchanges to buy and sell Bitcoin and crypto. I personally set up a recurring purchase order for Bitcoin once a month, and it's made crypto investing so much easier by automating and streamlining the process of dollar cost averaging into Bitcoin, and it's definitely paid off tremendously well for me in the past few years. I honestly don't know if I would have been as disciplined or consistent with Bitcoin and crypto investing if I didn't have an easy, automated way to set up recurring buy orders. Especially when the market is down and all of the ticker symbols are flashing red and I'm too afraid to buy more, even though history shows time and time again that dollar cost averaging is such a powerful way to consistently build wealth in an asset that goes up over a long period of time, like Bitcoin or the United States stock market. Gemini operates in all 50 US states. They're trusted by some of the most well-established financial authorities like Forbes and NerdWallet and many more. And you can set up recurring buy orders as low as $5 in any crypto you want, in any time frame you want, whether it's once a week, once a month, or a custom buy schedule that you choose. So if you're interested, click the link in the description. Thank you guys for listening, and now let's get right back into it. So far, we've covered two American tech giants, but the next company, while based in Europe, is arguably more essential to the entire AI revolution than either of them. ASML is the one quietly enabling it behind the scenes. This company designs and builds extreme ultraviolet lithography machines, or EUVs. It's a mouthful, I know. They're essential for making the most advanced chips in the world. To put that in perspective, every modern chip made by NVIDIA, AMD, or Apple depends on ASML's technology. Without them, the AI hardware revolution simply doesn't exist. Now, ASML's stock has had an impressive run. It's trading around a 29 times forward earnings multiple, which some consider pricey, but you have to understand what you're buying. This isn't a cyclical chip stock, it's a highly specialized monopoly with recurring revenue that compounds over time. One of the company's predictable growth drivers is installed base management, essentially the ongoing servicing and maintenance of all of its machines in operation worldwide. Here's the key stat. Virtually every single ASML system ever sold is still active, and every one of those systems needs regular service, upgrades, and calibration from ASML. That means as their total installed base grows, their recurring revenue grows right along with it. ASML remains one of the most predictable, long-term compounders in tech. I'd consider any price under $1,000 per share a reasonable entry point, and I expect the stock to deliver double-digit annualized returns over the next 5 years. Now, not every great AI play is about chips or cloud computing. Some of the best opportunities are companies using AI to transform every single industry, and the next one proves that point better than almost any other. Number 4 is Netflix, and yes, I consider it an AI company. Most people think of Netflix as just a streaming platform, but behind the scenes, it's one of the most advanced, data-driven content companies in the entire world. Netflix has been using machine learning for years to recommend shows and predict viewer behavior, but now it's leveraging next-generation AI to revolutionize how content is produced, how it's localized, and how it's delivered. For example, Netflix already uses AI to analyze scripts, predict completion rates, and optimize budgets. It's also experimenting with AI-powered dubbing and localization, allowing global audience to watch shows in their native languages with far more realistic voice translation. And while AI helps Netflix operate more efficiently, it also enhances creativity. Their internal teams are using AI tools to design sets, improve visual effects, and reduce production timelines, freeing up more resources for storytelling. Financially, the company's stronger than ever. Earnings per share have been compounding at more than 30% annually over the past 5 years. Free cash flow now exceeds $8 billion in the trailing 12 months. The predictability of Netflix growth is what sets it apart. They dominate streaming worldwide with pricing power, diversified revenue, and consistent margin expansion. Even major competitors like Disney, Warner Bros., Discovery, and Paramount can't touch their scale or profitability. And later this year, Netflix is releasing the final season of Stranger Things with episodes that rival blockbuster films in budget and quality. Those events drive massive engagement spikes and pulling in new subscribers while also retaining existing ones. Despite its valuation, I believe the company is still in the early stages of monetizing its global dominance. So far, we've talked about trillion-dollar tech giants and industrial powerhouses, but the fifth company on this list might surprise you. It's smaller, faster growing, and leveraging AI in one of the most innovative ways in the world. Number 5 is Duolingo. And I know this one definitely sparks debate. When people hear Duolingo, they think of a cute little language learning app, but that drastically underestimates what this company has become. Duolingo is one of the most advanced consumer AI platforms in education today. The entire experience, from personalized lessons to conversation practice, is powered by artificial intelligence. Here's something most people don't realize. Duolingo is OpenAI's #1 enterprise customer by API usage. That means they use more AI tools from OpenAI than any other company in the entire world. Some critics argue Duolingo doesn't own its technology since it uses OpenAI's model, but that misses the point. What Duolingo truly owns is its user experience, the interface that millions of people interact with every single day. That's where the real value lies. To understand this, look at Spotify. Spotify doesn't own the music, Universal Music Group does, but Spotify owns the platform and the distribution. That's exactly what Duolingo has in education. And unlike other AI customers, Duolingo could easily switch from OpenAI to Gemini or Anthropic if needed, with users barely noticing. That flexibility gives them massive strategic power. Financially, the company's growth is just staggering. Earnings per share are up more than 70% year over year. Subscription revenue, which now makes up the majority of sales, is growing around 45 to 50% annually. Paid subscribers have climbed above 30% year over year growth, and engagement metrics are hitting all-time highs. The beauty of this model is predictable. Each new paying subscriber becomes part of a recurring revenue base that compounds over time. And as Duolingo refines its AI-driven conversion funnels, margins keep expanding. Yes, there's more volatility here than the companies like Google or Amazon, so I size my position accordingly, but Duolingo could quietly become one of the most valuable education platforms on the planet within 5 years. So let's recap the 5 AI leaders I believe will continue to win in the long term. Google, combining AI with search, cloud, and subscriptions. Amazon, embedding AI across retail, cloud, and logistics. ASML, powering the chips that make AI possible. Netflix, using AI to create and deliver global entertainment. And Duolingo, redefining how people learn with AI-powered education. Each of these companies is approaching AI from a different angle, but together they represent the foundation of where the economy is headed. Software, infrastructure, content, and learning, all transformed by artificial intelligence. The lesson here is simple. You don't need to gamble on unproven startups to invest in AI. The biggest opportunities often come from companies already winning, those with scale, profitability, and the resources to adapt. For those of you who've been investing in AI stocks already, how are you managing risk? Are you focusing on diversification or concentration in your highest conviction plays? Let's have a conversation below, and I'll try to jump in there as best I can. If this breakdown helped you at all, tap that like button so more investors can find it, and make sure you're subscribed for weekly videos on wealth building and investing in the technologies shaping our future. Don't forget to check out Gemini and the link in the description for the safest and easiest way to dollar cost average into Bitcoin and other cryptocurrencies. Gemini is one of the best platforms out there to automate investing, so you don't have to worry about making emotional investing decisions when the markets go up and down. The most successful investors take emotion out of the equation and use automation and proven and simple principles like dollar cost averaging to help them win in the long run. Setting up recurring automated buy orders of Bitcoin was one of the smartest moves I made a few years ago, and it's really paid off for me. It's a strategy that I'll definitely continue to use well into the future. As always, thank you guys for making it to the end of the video. Thank you so much for watching, and I'll see you guys in the next one.